Hello, traders. It's 90 minutes before the open on Wednesday, December 22nd. We've got today and then one more trading day this week, and then we've got the Christmas holiday. So please let me take this opportunity to wish you all a Merry Christmas. Keep your trading very, very light. Look for one or two good trades to set up. If you can do that, you're going to be in great shape. So let's take a look at the Netflix pick that I posted 2 days ago. I did not do a video yesterday. I liked Netflix as a short. It had broken below the 100-day moving average. Lo and behold, the stock rallied. In fact, we're seeing that across the board. We're seeing some of the really strong stocks be vulnerable to profit taking, and we're seeing a lot of the laggards that have been dumped actually find a little bit of a bid. This is probably window dressing going into year end. You can see how Netflix, this is where the video came out, has done nothing but rally. So call a spade a spade. Was it a bad pick? Yes, it was a bad pick, but not from a technical standpoint. There's simply some rotation going on. If you watch my videos, you understand the concept of relative weakness. You do not want to be shorting a stock when it is strong relative to the market. So let's take a look at how the action unfolded 2 days ago. And this is where you would have been shorting the stock right here, right? Wrong. Do not short stocks that are stacking long green candles one on top of the other. You can also see one OSI greater than zero. That means that it is strong relative to the market, not weak relative to the market. Now you can see that a lot of those gains were given back, but eventually through the course of the day and yesterday, the stock actually did start to get a bid. I can put up an overlay of the SPY. Perhaps that helps you see that relative weakness that we were looking for. Market down, stock should be down and down bigger than the S&P. The gray line is the S&P 500. It wasn't. The stock continued to surge. That is relative strength. We'd actually be looking for stocks like this to buy when we're day trading. So Netflix, I still don't like the daily chart. You can see how the stock is below that 100-day moving average. It's been falling at a time when the market is pretty close to its all-time high. That's negative price action. So would I rush in and buy it because it's had a couple of strong days? No, I'd want to see a base form and then for it to close above the 100-day moving average for a few days. Then at best, I would be selling an out of the money bullish put spread down below technical support, probably keying off of that 575 level. So Netflix, not a good pick. Abbott. Hey, Abbott, healthcare. That's got to be a good one, right? Healthcare's been hot. Let's take a look at that daily chart. This was your long of the day. You can see how the S&P 500 was trading down. We expect the stock to tread water and hold its own. So let's go into the 5-minute chart. And you can see from 2 days ago, which is when I had made the suggestion to buy Abbott, it never had relative strength. I mean, you had this first long green bar on the open of the day. The gray line is the market. Market down big on the open and continues to sell off. Look at the stock. Instantly reverses that long green candle right there. What you wanted to see and what I described in the video was market down, down, down. Stock opens and flatlines. It's holding the bid, holding the bid, holding the bid. That is a sign that buyers are lined up because typically stocks follow the market. And when they don't, it means that any pounding on that bid, any profit taking has been overpowered by buyers because they're lined up. Well, that's not what happened in this case. When the market went down, the stock behaved as you would normally expect. It started to sell off. So the buyers were not in there supporting it. If we had seen that support, and the market had found support throughout the course of the day, there we got a double bottom high or low right in here, provided that Abbott had been holding its bid very well, this is where you would be buying a stock like that with the expectation that it's going to continue to move higher. We had a number of stocks yesterday that showed a lot of relative strength. I'll take an example, EXPE. That is phenomenal relative strength right in here. And this is what you want to be looking for. So the stock opens higher. Then we start stacking some long green candles in here. Well, what's the market been doing in the meantime? Down, down, making lower highs and lower lows. What is the stock doing? Marching higher. When the market finds a bid right here, this is where you want to enter this stock. Even if the market continued to sell off, this stock would at worst hold its bid, hold its bid, hold its bid, and that would give you an opportunity to exit this trade knowing that, hey, the market's a lot weaker than I thought, and the market looks like it's going to fill in this opening gap right here. So I'm going to go to the sidelines on this stock for a bit. Now that I'm on the sidelines, I'm going to watch the market. I'm going to watch for that market support. What do I do with the stock? Come in, click alert, double click on these bars right here so that when the stock recovers and it gets through that high, I know instantly I can reevaluate. I've got a pop-up alert. I don't have to park on the stock. I can be out looking for other opportunities. Market stabilizes. I get that pop-up alert that, hey, EXPE is ready to go. Boom. Then you're right back in on the trade. That's how you structure your trading during the course of the day. I also want to talk a little bit about cycles that happen through the course of the day and how you can use the 1OP indicator or any other indicator that you might use to time your trades. So yesterday, we get this little bit of a rally up, get this gap opening. In my pre-open market comments, I've been stating, don't rush into the market on these gaps higher. You will have an opportunity to get long, especially after the previous day being a hard sell. You were not going to be off to the races until the bid was confirmed. So market sells off. We start filling in part of the gap right in here, get a little bit of a rally, and then we make a lower low. But this is what I call a marginal new low. Well, what does that mean? That means that we barely made a new low. If we would have come all the way down here, that's a pretty considerable new low, and it measures up. So that would be a measured move from there to there, there to there. That would be a measured move, and it would fill in the gap, but we didn't make a measured move here. We only dropped a little bit, so it is a marginal new low. That is a sign that support is forming. There's your bearish 1OP cross. There is a bullish 1OP cross right in here. Downward sloping trend line, breach to the upside on a long green candle. Okay, so this is how things actually unfolded yesterday in the chat room. We had a very bearish day on Monday. Yesterday, the market gaps open. Okay, we know that there's a chance that this gap is going to fill. When you think that you might want to short, right in here, the 1OP indicator is going to temper that bearishness because it is in a deep trough and it is ready for a bullish cross. So down in here, you want to make sure that this breakdown has follow through. If it does, you can continue to favor the short side, but you should be taking profits on your short positions right here because you've got a deep 1OP cross. By all means, you should not be looking to add to shorts right here until you're able to see a little bit of this bullish cycle. So we get a bullish cycle. Is the market going to rally on this bullish cycle? 80% of the time it will. So it is worthwhile to see what happens here. So the point is you get this long red candle, and now you're kind of sitting here and you're watching to see, is this a shakeout? Are we just trying to trigger sell stops and shake these buyers out right here? Well, we won't know until we see a few more bars, and now we get this little green candle right in here, some follow through. Okay, now we're starting to get a few consecutive green candles. We got a definite 1OP cross. Now in here, we've got a nice long green candle through. That patience that you showed right here, because 1OP was getting very, very extended. The fact that you did not short here saved you a lot of money. It's that patience. It's waiting for things to set up, watching what the price action actually does. And then, if you've been on the sidelines, you get that confirmation with the technical breakout to the upside and the bullish 1OP cross. Now you know you need to be long. this long green candle here, was this a fake? And programs do this all the time. If you're ever wondering, how does this happen? I get this beautiful breakout right here. It's through the downward sloping trend line. This is the stuff I'm supposed to be trading. This is the stuff I'm supposed to be watching for. So you buy here and you're like, this is a nice breakout above that downward sloping trend line. And then you get maybe a doji, and then you get a red candle, and then you get another red candle that takes out the low of that green candle. Uh-oh, this was all program generated. It was intended to lure in bullish speculators, and it was intended to get shorts to cover, take profits on their short positions when they see a breakout like that. Sometimes that move will reverse because it was just a head fake. So you have to be very careful on these breakouts. They don't all continue to go. In this case, half of that long green candle is preserved. That's exactly what you wanted to see. So you're continuing to wait. Oh, here we get a nice little green bar. This is when I bought, because now we've got confirmation that that middle of that green candle has held. I'm on an excellent 1OP bullish cross. See you later. That was a fantastic trade for us. So let's say that you're long stock. You were able to pick up on this really nice breakout. You know that it's a holiday type session and that the trading volumes are going to be lower. So you're watching to see what happens on this rally. Well, if you were long a lot of stock in here, get a little bit of a bullish flag formation here. You can see the downward sloping trend line. You want to be cautious in here because you've got a bearish 1OP cross. So you can start taking a little bit of profit on your long positions. That would be a prudent thing to do. You start seeing this bearish cross unfold in here. And what did the market do when you had that bearish cross? 1OP is falling. The market should be falling. If the market during this bearish cycle is flat, that's actually a very, very bullish sign. That is what we call a divergence. If the market is moving higher when you get this bearish cycle, that is super bullish. And that's exactly what happened. So from this point, which is where you have the cross, to this point, so right here to right here, what did the market do? It moved higher against this bearish cycle. Super, super bullish. That tells you it's all systems go. Not only will this bearish cycle produce gains, but this bullish cross right in here will be excellent because you have confirmed that the trend strength is super, super strong. So you stick with the position, and now we get back into normal cycles where you get a bearish cross here. Okay, that you could have at least scratched or made a little bit of money on. Bullish cycle here. Okay, you're close to the end of the day, so you're going to start seeing some chop. So that's how we use the 1OP indicator. But the point that I want to make to you, yesterday we had a bullish trend day. You don't always get bullish trend days. Some days the market is just range bound and chopping around. What you want to do is you want to use this 1OP indicator to kind of throttle your positions. It is the governor. It dictates all of our actions. So here, if you're short on the open and you start getting into this point right here where you're deep in a trough and 1OP is starting to give you a bullish signal, you want to be taking profits on some of your shorts. You do not want to be initiating new shorts. You want to watch part of this cycle unfold and see what the market does during it. So if you get a bullish cycle in here and the market heads lower, then you know that this actually could be a bearish divergence setting up, and that would indicate lots of downward price movement. So you're cautious when you start getting into these big spikes and big troughs. You watch, you observe, you keep flipping through charts, you keep looking for those prospects so that, hey, guess what? This bullish cross actually did materialize into something good. Fantastic, because I've got 4 or 5 longs that I've found, and now I'm ready to buy them, especially when I get technical confirmation. Then we're off to the races. So let's take a look at the market. Let's see how it sets up for us right now. We are in holiday trading mode with lots of volatility. We can put up the 100-day moving average. We did test it, and we tested it successfully. It held. got our bullish hammer right in there, and then continued to move higher yesterday. So, what are we going to do today? Market's opening flat. We've got 2 more trading sessions left before the Christmas holiday, then a 3-day weekend, and then you know that the trading's going to be pretty light heading into year end. Typically, this is a seasonally bullish period, Santa Claus rally and all. I've got to tell you that this price action in the last 2 months has been very, very wimpy. So not a lot of confidence going into year end. Typically, we see much better. The fact that we are not seeing much better, the fact that we are all over the board tells me that there is uncertainty creeping into the market. And if we take a look at a weekly chart, strong trends like this eventually turn into sideways trading ranges. I believe that's what we're going to see in the first part of 2022. We're going to see range bound trading. Everybody's going to be trying to figure out just how aggressive the Fed is with its tightening. We know that they're accelerating the tapering. We know they're looking for 3 rate hikes in 2022. That's up from 0 in September. So yes, the tone has definitely changed, and the initial phases of tightening are not well received by the market because analysts and investors are worried that that tightening might strangle economic growth. After 6 months, if the economy is still humming, then all of a sudden the market starts to recover. Even in a higher interest rate environment, the market can move higher. It's done so over many decades. As long as that economic cycle is intact, the market will tolerate higher interest rates. So now that we're starting to finally see some nervous trading in here, I believe that's going to continue probably into January and February. Stocks are at extreme valuations that we haven't seen since the tech bubble of 2000. So time alone could solve some of that. We spend time going sideways for a couple of quarters, and all of a sudden those PE ratios start coming down because the earnings have been able to catch up. So I'm pretty cautious in here for 2022. I don't like the setup that we're seeing. Seasonal strength is going to keep buyers engaged for right now. So we'll see what happens. We still got about another 7 trading days left. So I'm going to be focusing on the bullish side today, and I may show you a short as well. So let's go in, let's take a look at our heavy buying list. Let's see what we've got on this. I'm going to be looking for stocks that have strength. So first on the list, Nike. I'm going to take the SPY off because that's just getting in the chart, in the way of the chart. Downward sloping trend line. Not real crazy about Nike. MU I like, and that is probably going to be your pick of the day. So downward sloping trend line here on Nike. It's got a lot of room to go. It had a nice bounce after earnings. You can see the weakness there. The support level needs to prove itself. I need to see a couple of bounces off of here. Spend some time. Ideally, given this weakness right in here, I would like to see a market decline, and I would like to see the stock treading water for a while. That would tell me that buyers are very comfortable with this price level and that the next move will be higher. So not crazy about Nike. I do like MU, very choppy stock. So if you're trading it intraday, you have to buy dips. You do not buy breakouts on a stock like this. This is a nice breakout. We want to make sure that it's able to hold that breakout. That 87.60 level is one that you want to see preserved today. And we'll go into the 5-minute chart. This is an earnings rally. You can see stock was pretty compressed, but it did close near its high of the day. Market closed near its high of the day. I like Micron. It is a choppy stock to trade, though. It moves all over. So make sure you're setting passive targets. It's not the kind of stock that is going to go, and then be off to the races making huge moves. It tends to rally 2 steps forward, 1 step backward type of pattern. The biggest theme that I can emphasize right now is keep your trading super small. We've been to hell and back in the last few days. So massive sell-off, massive rebound. I think that now that we're back in the middle of this range right in here, you look at where we closed yesterday, take that high, take that low, find the middle point. We're right in that middle point. Holiday session, I think we're just going to spend time right at this level. I'm not looking for a big rally or a big drop. We already know there are opposing forces. There are sellers, there are buyers. So we're just going to chop around on light volume. So the main thing is try not to trade. You're going to be in very, very difficult situations during the course of the day. If you're a pro, you'll know when to be in, when to get out. You'll set passive targets. You'll be okay. But even then, 2 or 3, 4 good trades, that's about all you can expect in the type of environment that I see unfolding. So that's your primary thing. Let's go through and see if we can find a couple of others that I like. AA, downward sloping trend line, breach to the upside, challenging the high. Yeah, AA's got some nice strength to it. I like that. I am not looking for stocks down in this corner right in here, although some of them have been very strong. Wish I would avoid stocks like that. BB. You could day trade them. The only problem with it is that when you know that you are trading against a very, very weak daily chart, it's just a matter of time until those sellers come back because the bounces that we're seeing are simply short covering bounces. Traders who have been short for a very long time are taking profits when the stock is dropped. They start taking profits in here. This is not a bottom fisher thinking that this is the deal of the century. This is the next great stock. You're typically going to see, okay, we rally a little bit and then ka-chunk. We get a bearish flag and the next leg lower. That's what you have to be very careful of because when those sellers return, they hit it hard. And you take out the low and then you continue lower. So if you come down, make a higher low double bottom. Oh, okay, well, that's different. Now I know I have a support level to lean on. You have 2 or 3 support levels, higher lows. Ah, okay, now we're out of that lower quadrant. We're getting more into the 25 percentile of the 60-day range. Then you could start to buy stocks as long as you have that nice defined support. But on the first bounce, no, you do not want to be buying that. So we'll go through and see if there's anything else that strikes a chord here. And I'm just going to be flipping. I'm looking for stocks that are not in the lower right-hand corner. And it's going to be hard. Everything that I'm clicking on, you'll see, those are all bottom fishers. Apple could be pretty decent as well. That midpoint at 175 of that long red candle, if we can get above that, it's got a chance to continue to move higher. So it's put it a nice little low here. So watch that 175 level on Apple. If we can get through it, I think the stock may have a chance to challenge the high of the year. So I think those are 2 stocks that you can take a look at from the long side. I think they should perform well. Apple and Micron, both technology stocks. Let's go in, take a quick look, see what we've got in heavy selling. And I'm going to go into relative week 30. Let's see what closed fairly weak. NVAX, not particularly good. Goldman Sachs, downward sloping trend line through the major moving averages, through horizontal support below the 200-day moving average. Goldman Sachs, banks in general have been soft recently. Goldman Sachs could set up to be a nice short. Make sure that it's below that 200-day moving average, and then you've got an opportunity as long as it shows relative weakness. Go into the 5-minute chart, and you can see that yesterday the stock did rebound, but that it did have bouts where it was weak relative to the market. We'll go into the previous day, take a look at that. You can see stock was weak relative to the market, orange line below 0. So I think that banks may be a good place to look for some weakness if the market starts to soften up. Keep it balanced. Merry Christmas. Please enjoy your time with your families. We'll see you next week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.